there's some built-in conservatism to those projections. There was, after all, a pretty meaningful inflation scare in Q1, where disinflation trends all but stalled out. So understandably, the Fed's going to be building in a little bit of caution that way. We have had several false starts in the disinflation story, and at the same time, it's got to be stressed that those dots are not an ironclad pre-commitment. It is a snapshot of a broad array of opinions. To be fair, walking back the number of cuts this year from 3 to 1 does arguably reduce a little bit of the Fed's optionality. But look, if the May and June and July PCE figures show a 3-month annualised pace getting close to 2%, I think the door is wide open to a September rate cut. And at the same time, a lot of leading indicators of the labour market, beyond the payrolls figures themselves, suggest there's a healthy rebalancing unfolding. The quits rates, job ads, job openings, the unemployment rate are all moving in an encouraging direction that suggests, at the very least, wages pressures are moderating. So even though there's only a commitment in the dots to 1 cut this year, and a loose one at that, because after all, there's still 15 of 19 talking about something between 1 or 2 cuts, even though it's not a pre-commitment, and they've only penciled in 1 cut, I actually do think the door is wide open, given these more constructive trends that as we moved into Q2. I do think the door is wide open to a September rate cut and possibly a follow-up in December.